Hi, this is Joseph, and in this video we're going to talk about the continuation breakout trade. Now, I've made a couple of videos over the past 24 hours about the continuation breakout trades that I've set up over the past few days and the different currencies, and I've been getting a lot of emails asking specific questions about the exact technical entries that I'm using for this. So let's start off with the indicators that I'm actually using. First of all, you see here in the price pane, I do have a 34 EMA wave going through here. This is a 34 EMA. The top one is set at the high, the middle on the close, and then the bottom at the low on the 34 EMA. The green line that you see in here, this is a 1 hour time frame. The green line is the 50 simple moving average. And then, of course, the Bollinger Bands. Now, I really pay more attention to what's going on with the Bollinger Bands. I am aware of the wave. The wave is sort of there just to give me a sense of direction, but it's not really specific to the setup itself. It's just sort of something that I leave in the background. Most of my charts, I do strip away the wave out of there. So I do use the Bollinger Band, specifically in the price pane window, and then down here I'm using the CCI set at 14 on the 1 hour time frame, and then I'm using the MACD histogram. I don't change the default settings there. Let's take a look at the continuation breakout trade. Basically what I'm doing is trying to identify a range of consolidation, a high and a low, and it needs to be in place for at least 7 hours, and it has to be a very specific range. Now, I teach you how to use this strategy. I give you all of my trading course material when you sign up to use the Trade Copier program. So all of the trading education is all included, but basically what we're doing is looking for a specific range of consolidation, which is approximately 70 pips. I mean, it can't be too small. If it's too small, like let's say 30 pips, then it could lead to a false breakout. So this was appropriate. This was good. This was about all we were going to get anyway, but you'll notice that the reason why this one worked out a little more effectively, at least from a technical point of view, from confirmation, is that this is last week's high up here, just to the left of this chart, and you'll notice how it comes into play. Now, price doesn't actually have to hit support or resistance on the number, of course, to cause that bounce or to move away from it, as it did in this case, but you do see that little double top here on the 1 hour time frame, but it's testing that resistance level. Now, you get a couple of options. There is a Tech 1 trade to sell this as a reversal right here. You do see that one bearish engulfing candle. That is sort of a signal to go short here, but if you're not comfortable with it, if you still anticipate the possibility that this could go back up and test last week's high one more time, in other words, it could be a premature move. It could be just a little too early, maybe a little more risky for some traders. What I like to do is also wait for the candle to close below the consolidation range. This gives me a much more reliable signal. This technique and this signal candle will work every single time as long as it's identified correctly and the indicators are doing exactly what they're supposed to. Now, you'll notice on this red arrow candle here, that's the signal candle that closed below support. And when I get that candle, I have to wait for that candle to close. I can't be anticipating or guessing that it's going to close below support. I have to wait for it to actually close. And then I look at the Bollinger Bands, and the Bollinger Bands need to be separating away from each other on this signal candle. That shows me a sign of strength. And then I look down here at the CCI. There cannot be any divergence in the CCI. And then, of course, the MACD histogram, it doesn't necessarily have to be in the negative territory if it's going to move down. It just needs to show the possibility that it can eventually move to the downside. Usually it will be, but that's not really my first piece of confirmation. I look at the CCI before I look at the MACD histogram. But definitely on this breakout signal candle, the Bollinger Bands have to be separating away from each other. Now, I wait for a 3 pip entry, which means I calculate the low of that signal candle, in this case because we're selling it, and whatever the low of that candle is, I have to wait for price to move 3 pips lower than that low of the signal candle. And that's my entry, a 3 pip entry. So you probably heard me refer to it in other videos as that 3 pip entry. Once I get that 3 pip entry, I get into the trade. I'm using a 55 pip target, a 55 pip stop. It's a 1-to-1 reward to risk ratio on this trade. Now, sometimes obviously they do go a little bit further, sometimes they don't. They stop right at around that 55 pip move. I've calculated this by using this strategy since 2001. The targets are based on the overall daily average ranges. So here you'll notice how this one paid and moved smoothly. There really wasn't anything to worry about. There wasn't much of a pullback. However, this isn't always the case. There are times when I get a signal candle and everything confirms correctly, but I don't get the 3 pip entry on the next candle. I have to wait a few hours. Sometimes it'll come back up and test that support level, which would then act as resistance. Sometimes it moves a little bit higher, and then eventually it comes back down. And I'm going to show you an example of just exactly that, where I didn't get the entry on the next candle. I had to wait a few hours. Let's take a look at the pound dollar. This is the pound dollar, and over here where this red arrow is, you'll notice a small candle right here. That was my continuation breakout signal candle. Now it closed below support. There was my signal candle. The Bollinger Bands were separating the way they were supposed to. No CCI divergence, no MACD divergence. And I had to wait for my 3 pip entry, which didn't occur until many hours. I had to wait before it actually started to come back down towards that support level to give me that 3 pip entry. Now this was on economic data for the UK, and that's what caused this sharp drop immediately down here. Now within 1 minute, this candle dropped approximately, I believe it was about 60 to 70 pips. So it's possible that you might have maybe missed this trade if you were waiting for it. Maybe a manual execution would probably be the best thing, just to make sure that your broker isn't going to freeze the price. But regardless, the trade and the signals still work. The continuation breakout trade is based on identifying consolidation and then looking for a breakout of that consolidation in the direction of the breakout. So there's going to be a trend. It puts me in the path of a big trending move, and you'll notice just how sharp this move dropped down to the downside. So if you'd like to learn how to use these strategies, you can go to my website, forextradingcoach.com. Scroll down to the bottom of that page, and you'll notice the link to go to my blog. On my blog, I have a lot of articles, PDF manuals, and videos that will teach you exactly how to use this strategy. But if you're not comfortable using this strategy and you're not comfortable executing some of these trades, you can join to use my Trade Copier program. It works with all MetaTrader platforms, and it automatically executes all of these trades for you into your trading platform, and it doesn't even require VPS service. And we guarantee a positive monthly profit every single month. Thanks for watching, and I look forward to trading for you.